a reverse mortgage gives you all of these advantages that Jim was talking about. The protection basically being flipping the risk compared to the bank in a traditional mortgage. You're protected by the mortgage insurance. You have the primary protections. You're going to end without equity in the property or with less equity. But that's fine because your estate isn't going to have an issue paying that off. Instead, you get all these protections and you get the advantage of borrowing back your own capital at low interest so you can get higher returns through other investments. Makes a whole lot of sense. Reverse mortgages are not just for people with cash flow difficulties.
I have 3 clients that come to mind, 2 of which have over $1 million homes that did that strategy. One had a $500,000 home. And
Yep.
let me add icing to the cake on that one, Mike. I love what you said. Totally agree. In addition to that, if you have, let's just say $1 million home, if you have 5% appreciation on that, that's $50,000 a year, right? Simple interest, it'd be more than that compounding. But if you're borrowing money at 3.5%, if you wake up a year, 5 years, 10 years from now, you're still going to have more equity when you sell that home, and you've got all of the benefits you just spoke about.
Absolutely.
Oh,
you're
my
right.
God.
When I said it, I said you're going to end without equity, but you're absolutely right. Assuming real estate performs fairly well and that there's still a positive differential between the rate you're paying on that mortgage, or, I mean, you're not paying it, but the interest rate that is assigned to that mortgage versus the rate of appreciation of that real estate in this market, as long as there's a positive differential there, you actually will end your reverse mortgage with more equity than you started, even though you took that capital out and were investing it in other assets during the entire time.